Everybody. I hope you've had a wonderful week. I want to talk about two key pieces of information today that I have been reviewing. The first one is this Planning Australia's migration program. We've spoken a lot about this in our recent reporting, both Chris and Louis Heaton. But this part here I want to talk about relative to another article that I recently read here. So, obviously, over the past couple of years, we've had a negative impact on our net overseas migration. People have been leaving Australia, going back home. Over the next couple of years, it is anticipated that we will have strong population growth off the back of net overseas migration. We're going to have more people coming back into the country. And from a real estate standpoint, I really want to be looking at, well, where are all of these people going? On top of, where are all the major tourist destinations? So net overseas migration is made up of a few key things. It is skilled workers, the family stream, and then, it's basically those two, skilled stream and the family stream. Now, over here, it talks about permanent migrants that have arrived since January 2000 by region, and it shows you where people have historically landed in Australia. And it says here that the biggest winners are Greater Sydney. So a lot of people, skilled migrants, are coming into Sydney. A lot of people are coming into family related, are coming into Sydney as well. Then you've got Melbourne, and then you've got Greater Perth. Now, there are almost as many skilled migrants going into Melbourne as there are in Sydney, and that's very interesting to me. So, looking at this data, these are the two major winners of the borders opening back up. And then I want to go and say, well, what type of real estate are they going to be most interested in? More often than not, it is affordable real estate. And to start with, they're actually going to be renters. It's not very often that migrants come into the country, immediately go and buy some property. They're more likely than not going to come in, rent a piece of real estate in an affordable location, or locations that follow their ethnic groups. People like to hang around like-minded people. So this is really interesting data that you can go take into your research and reporting and think about, well, where are these people going to go? Where are they going to live? What impact will it have on my real estate portfolio? Now, there was an article written by JLL, the tail end of last year, Q3 last year, 2021, and it looks at the apartment market. Now, one of the things that we saw this year was how well the housing market performed. Now, the housing market performed exceptionally well, and there was a few key reasons for that. This is what they've said here. The rebound in the Australian housing market more broadly has been driven by a combination of record low interest rates, because it's really cheap to go get debt, fiscal incentives such as the home builder, and then first home buyer incentives. The other thing I think has helped is the fact that we've had COVID. People have looked to larger accommodation styles. Detached housing really has been the big winner there. Now, looking at the growth rates, houses performed at about 20-odd%. Now, apartments grew at 11%. Historically speaking, apartments and houses have tracked relatively similar growth rates, with houses really leading the way. But there has been, aside from here, they've tracked relatively similarly. They've kind of been pretty close to one another. Now, this report goes on to talk about the differences, and if you've seen any of our previous videos, we do talk about this, the difference between the house price and apartment prices. And basically across the board, houses have gotten much more expensive than apartments. And one of the other things that this report talks about, which is pretty interesting, is supply. So here we're basically coming off the back of record levels of supply. This was the last boom here, 2016, 17, 18. The market fell off. A lot of property developers kind of slowed down submitting applications, getting approvals, and putting things under construction. And we've now largely have sucked up a lot of the supply from the last boom. But because of that slump in the market, it is anticipated that we're going to have a lot less supply than we typically have, and it's going to take a while for that supply to come into the market. The reason being is you typically take anywhere between 12 and say 36 months for you to go and get a development application, submit plans, get an approval, then you've got to get your pre-sales, and then you start construction, and then eventually gets there. So it takes a while for supply to come onto the market. So it looks like there will be an undersupply of apartments in these major metropolitan areas for a while. And one of the other things that we want to be paying attention to is, and it does talk about that here in demand, that there are interest rates will be going up, and one of the interesting things that we've seen here is there are a huge amount of investors that are stepping into the market. This run was largely been driven by owner-occupiers and affordability, but the next run is going to be driven by a lot of investors stepping into the market, looking to derive a really good income, especially because there is inflation, especially because your cash isn't really doing too much at the bank, and being able to get good rent, strong growth over the next 2, 3, 5, 10, 20 years is going to be important, and that will come from good quality real estate. So really, I think the thing that I'm trying to point out here, that it's telling me, reading this data and sort of reading between the lines, it really does look like apartments will make a good investment over the next short to medium term, definitely over the long term, but the short to medium term is where we're going to see some good growth. As properties become more expensive, people will shift their attention towards more affordable options. But then as the migrant market does open back up again, there's going to be a huge pool of potential tenants coming in. Tourism comes back in. They're going to take a lot of the supply out of the market as well. So there are going to be, I think, a lot of people, investors, stepping into the market to buy up apartments because they are affordable, but then also a lot of owner-occupiers because it's simply becoming too expensive, particularly in these 3 markets, Sydney, Melbourne, and in Canberra, to go and buy a house. Anyways, that's my thoughts for the week. If you agree, great, thanks. Let me know what you agree with. If you don't agree, even better. I'd love to hear what parts of this analysis you didn't agree with or you'd like me to elaborate on. I will share all of these reports. You can go to the JLL website to pick up theirs. And then this is just simply from a government website, homeaffairs.com.au. Have a lovely week.